Activity-based management and activity-based costing. Why managers might need a sophisticated costing system such as activity-based costing. If you take coronavirus on the microscope, it might look beautiful, but it is deadly. That takes us to a hospital environment. In a typical hospital, there are patients. There are different types of patients. There are patients of dialysis, heart patients, and coronavirus patients. To support their recoveries, there are a team of cleaners, doctors, and nurses. They all work for these patients, and they are an example of overheads. How do we find the cost of treating these different patients in a hospital? Here the cost objects are the patients. They are the ones that we need to find how much it costs to get a patient recovered. So different types of patients in a hospital. In this illustration, there are coronavirus, dialysis, and heart patients. Then there are costs of workers who are supporting them to recover. There are direct costs and indirect costs. These indirect costs are called overhead costs. And these indirect costs or the overhead costs could be variable costs and fixed costs. They comprise cleaners, doctors, and nurses. Assigning overhead costs to a given patient category becomes complex in a complex environment such as a hospital. A way to think is to what kind of service activities are caused or demanded by each patient category. These service activities are causing the cost. We can take another illustration. Let's take an ice cream parlor. And in this ice cream parlor, there are different flavors that they sell. We want to cost different ice cream flavors, and these ice cream flavors becomes the cost objects. All workers serving flavors becomes overhead costs or indirect costs. How do we accurately cost the ice cream flavors? If we take an education environment, there are students who are studying different subjects. So these different subjects becomes cost objects if you want to find how much it costs to deliver a subject. Then to support that delivery of that subject, there are teachers and administrative staff working, and they become overhead costs. What is the cost of a subject for the institution? What is common here in this illustration is one or more than one costing object exists in a complex environment. One or more costing bases also can exist concurrently. So the challenge is how do we make an accurate costing connection between overhead costs and the costing object. Making a case for activity-based costing. Costing systems developed may be to estimate cost of inventory for financial reporting purposes. Indirect costs form a higher proportion of total costs. They form a higher proportion because of increased competition, more diverse outputs and processes. Broad averaging has resulted in inaccurate costs of outputs, which has in turn led to Broad averaging has resulted in inaccurate costs of outputs, which has in turn led to cross-subsidizing. There are symptoms calling for a sophisticated costing system. First, the amount of indirect costs relative to total costs is significant. Second, There are only one or two cost drivers in the costing system to allocate indirect costs to cost objects. Third, outputs make diverse demands on resources. We can translate output to differences in volume, process steps, batch size, or the complexity levels of outputs. Fourth, all or most of the indirect costs are treated as output unit level costs. That is, few indirect costs are classified at batch level or sustaining level or organizational level costs. Fifth, output that the enterprise is well suited to produce and sell show small profits, but less suited to produce and sell show large profits. Six, managers and workers working closely with processes and outputs perceive that the reported costs of outputs differ markedly from the costs that they might expect. There are three criteria for activity-based costing. The first is the high level of overheads or indirect costs relative to total costs. Second is the diversity of processes and outputs. Third, there's relatively high level of competition. So analyzing and managing activities are essential to identifying and achieving target costs. Activity-based management focuses on observing and analyzing activities and their costs as a basis for making a range of decisions. They include pricing outputs, deciding on the output mix, how to decrease costs, how to improve processes, deciding on what is necessary and unnecessary, how to improve on product design, how to increase profitability, and how to increase customer satisfaction. By analyzing these cost activities, managers can uncover information that can help them to make decisions about acquiring inputs in the form of materials, labor, power, equipment, and other resources that transform into outputs through processes comprising activities. Second, the activity-based costing gives managers information about costs of making and selling diverse outputs are rooted in activities, in what is happening in the enterprise. ABC, or the activity-based costing, brings out the cause and effect relationship between activities and cost. First, activities cause resources to be consumed, therefore influence costs. Activity-based costing systems include all resources consumed by cost objects that we want to cost, regardless whether they are variable or fixed costs in the short run, because they are overheads. Third, the management accountants express acquiring resources in monetary terms and identify the cost objects that consume these resources. Fourth, management accountants trace the costs of resources consumed to the cost object or allocate them to resource cost pools and activity cost pools according to the nature of the cost. There are 7 steps for the activity-based costing systems. First is to identify the output that represent the cost object that we want to find the cost. Second is to identify and trace direct costs to the cost object. Third is to identify and select activities associated with the cost drivers and activity cost pools to allocate costs to the cost objects. Fourth, identify the indirect costs for each resource cost pool, associated resource cost drivers to allocate them to the activity cost pools. Fifth, calculate the resource cost drivers and activity cost drivers. Sixth, allocate costs in resource cost pools to activity cost pools. Seventh, calculate the cost of the cost object. Cost activity has hierarchy levels. The 4 levels of hierarchy is the output unit level, batch level, output sustaining level, and organization sustaining level. Output unit level activities, they relate to a single unit output, running each machine with individual activities, is an illustration of output unit level activity. Cost of running a machine, consuming resources that cause costs, for example, electricity, that is a unit level activity. Output and activity has causal relationship. When the activity increases, the output increases. It is the output that creates or generates or causes the activity and the cost of the activity. When running increases, the electricity increases. Second is batch level activities. They relate to a group of units of outputs. The cost of setting up a machine is a batch level cost. The cost of setup activity increases with the number of setups needed to produce batches of output. If the time needed to set up a batch of one category of output differs from that required for another, then it is the time, it is setup hours, is a better cost driver than number of setups. Third is output sustaining activities. These activities are undertaken to support categories of outputs, products and services, irrespective of the number of units or batches that are produced. For example, a brand of beer attracts marketing and other costs relating to the brand, regardless of the number of liters or number of batches produced. Organization sustaining activities is the fourth. For example, a chief executive officer of an enterprise carries out activities that the management accountant cannot confidently associate with any individual cause output object. The absence of a cause and effect relationship provides a sound argument for not allocating costs of this nature, but allocating enterprise sustaining costs by definition is arbitrary. It can result with estimates that are likely to be misleading. Therefore, when it comes to activity-based costing, the unit level activities are the most accurate for costing purposes. Then comes the batch level activities with some degree of errors. Then the sustaining activities with a higher degree of errors, and the enterprise sustaining activities with much higher degree of costing errors. Using activity-based costing information to support activity-based management. Activity-based costing more accurately costs output units. First, traditional costing systems collect indirect costs into a single cost pool and allocate them to cost objects using a single cost driver rate. Second, these systems might exhibit symptoms of failing systems because activities are not clearly defined, or drivers might all be at the unit output level. These are not properly described as activity-based systems. Third, failing to identify activities and activity cost drivers within a functional department can conceal information that might be valuable for managing activities. Activity-based costing requires management accountant to first identify the cost object for which they wish to estimate the costs. The cost objects are primarily determined by the outputs to be produced and the related activities. Second, where outputs consume the resources which then become costs are traced to the cost objects. There are costs that are consumed have an indirect relationship. They are then allocated to the activity cost pools. There are 4 steps in activity-based costing system model. First, the indirect costs are allocated An activity-based costing model has 5 aspects. First, the indirect costs are collected into a reasonably homogeneous indirect cost resource pool. Second, the causal connection between the cost of resources and cost of activities are established. This connection is called the activity drivers. Third, the cost of resources pools is then allocated to cost of activities pools. Fourth, cost of activities from the cost of activities pool are assigned to the outputs. Fifth, the outputs rely on the activities for their production. Let's take an illustration of activity-based costing analysis. Machine running is an overhead cost here. The homogeneous cost, in that homogeneous cost pool, total estimated Let's take an illustration of activity-based costing analysis. Machine running is an overhead cost here. First, the homogeneous cost pool, the total estimated machine running overhead cost for 20,000 hours is estimated as $600,000. Second, activity undertaken, the total estimated machine running hours is estimated as 20,000 hours. Third, cost drivers, that is the cost per machine hour equals $600,000 divided by 20,000 machine hours, that equals $30 per machine hour. Fourth, how many hours been used by the cost object? Here, our cost object is a toy, making a toy. Machine hours used to making one toy is 1,500 hours. The overhead cost allocated to the toy as output cost object therefore equals 1,500 machine hours, and cost per machine hour activity is $30, that equals $45,000. Let's now look at a traditional costing analysis. Here's another illustration. Let's take a traditional costing analysis. It's based on departments. Here we taken a single department. The estimated department overhead cost is $2 million. Total estimated machine running hours in this department is 20,000. The predetermined overhead rate equals almost equivalent here to the cost driver. It's not a cost driver, but equivalent to the cost driver. Here is estimated overheads of the department is 2 million divided by the base. Here the base, which is the equivalent to the cost driver, is 20,000 machine hours. That equals $100 per machine hour. Let's say the toy is our output and toy requires 1,500 machine hours. Therefore, the overhead cost allocated to a toy is $100 per machine hour, 1,500 machine hours, therefore equals $150,000. The problem here is the functional department overhead costs are driven by not only machine hours but also by other activities. Let's now look at a comparison between a traditional costing and activity-based costing. In this illustration, the direct materials are $50,000. Direct labor is $50,000. So whether it is traditional or activity-based costing, direct materials do not change. Therefore, there are $50,000 and $50,000 in both scenarios. Let's now extend this to costing a toy, and there are 200,000 toys that's been produced. And in our analysis, indirect costs are 150,000 under the traditional costing, and we came up with 45,000 for activity-based costing. The total cost under traditional costing therefore equals 250,000. Cost per toy is $250,000 divided by 200,000 toys equals $1.25. Under the activity-based costing, the indirect costs are computed as 45,000. Total cost equals 145,000, and therefore cost per toy in this illustration equals 145,000 divided by 200,000, and that equals to 72.5 cents. So there's a difference between cost per toy between traditional costing method and the activity-based costing method. The traditional costing versus activity-based costing. The overhead base. The traditional costing uses the functional base, for example, a department. Activity-based costing uses the activity base as the overhead base. The overhead rate, traditional costing method, uses a single rate, whereas activity-based costing uses multiple rates, and it depends on which activities are causing the cost for the cost object. An example of activity cost rates, say making a toy a cost object. In this illustration, there are 4 different types of activities of making a toy. First is purchasing materials. What drives that cost are the pieces of materials. Overhead costs here were taken as $100,000 and an estimated number of units for this $100,000 is 50,000, and therefore the rate per piece equals $2. The second activity is machine setup. The overhead cost for 400,000, the estimated units for that 400,000 is 200 setups. For one setup, machine setup, the cost is $2,000. Third activity is the inspection. That drives the costs are the inspection hours. The weight cost is $100,000, and the estimated number of inspection hours equals 1,000. Therefore, the rate is 100 per activity per inspection hour. Fourth is machine running. Machine hours is the driver, cost driver. Overhead cost is $300,000. The estimated machine hours here is 10,000 for that $300,000. Therefore, the rate of running the machine per hour is $30. If you add up the total overheads, that equals $900,000. Let's say now there are two products produced. This is another illustration. In this illustration, two products are produced. And these two products are a computer monitor and a computer keyboard. In this illustration, there are 4 activities. And these activities are common to both products or cost objects, which is the monitor and the keyboard. But the amount consumed for each cost object differs. So let's look at the first one. Purchasing materials, $2 per piece. For the monitor, it requires 5,000 pieces. The cost is $10,000. For the keyboard, it requires 1,000 pieces. The cost is $2,000. Machine setup, $2,000 per setup. Monitor requires 10 setups, $20,000. Keyboard requires 2 setups, $4,000. Third, inspection, $100 per inspection. Monitors require 10,000. Monitors require 10 inspections, $1,000. Keyboards require 20 inspections, $2,000. Running machine, $30 per machine hour is the activity. Monitor requires 400 hours, $12,000. Keyboard requires 100 hours, $4,000. When we add up the monitor overhead cost, that total is 43,000. Number of items produced is, let's say, is 100. Overhead cost per item therefore equals $430. $43,000 divided by 100 items. Let's now look at the keyboards. The total overheads when added up equals $12,000. Items produced, let's say, is equal 100. And the overhead cost equals $12,000 divided by 100 items. That equals $120. Now let's compute the monitor cost and the keyboard cost. There's direct material and direct labor. Monitors and keyboard consume different amounts of direct material and direct labor, but they are common items for producing a monitor and a keyboard. Let's take the direct materials. 10 kilograms of plastic at $2 equals $20 for the monitor. 5 kilograms of plastic at $2 for keyboard is $10. Direct labor, 2 hours at $25 for monitor is $50. 1 hour at $20 for the keyboard, it is $20. It's because the keyboard requires less skilled labor. Therefore, it is cheaper. The labor cost is cheaper here, direct labor cost. Overhead, based on activity-based costing, which was previously computed, is $430 per monitor, and per keyboard it is $120. Therefore, based on the activity-based costing, the cost of producing a monitor equals $500. Cost of producing a keyboard equals $150. There are safeguards required for activity-based costing to work well. The first is the activity-based costing system with too many activities can become too detailed and unwieldy and too costly to operate. Second, managers also need to update cost drivers and cost driver rates regularly. Third, once the activity-based costing system highlights the cost of unused capacity as a separate line item, managers can examine the various options to reduce unused capacity to improve performance. Here's a case study. We named it as a family supermarket of activity-based costing and activity-based management. The financial statistics for the supermarket that sells 3 products or produce: the soft drinks, fresh produce, and packaged foods. So they become the costing objects for us to cost them first. In the financial statistics, provide us the revenue, cost of goods sold, cost of bottles returned, which is only for the soft drinks, then number of other parameters, non-financial parameters, non-monetary parameters, which are number of purchase orders placed for each cost object, number of deliveries received, and hours of shelving the stocks. And then items sold for each product here. So we will use this basic financial statistics to come up with an activity-based costing. In addition to that, there are other data that's provided. There are various activities conducted for these cost objects. For the bottle returns, it's returning of empty bottles to the store. The overhead cost is $4,800. The allocation is based on tracing the soft drink line because it applies only to soft drinks. Second activity is ordering, placing orders for purchases. Total overhead cost is $42,400, and the allocation base is purchase orders placed are 624. Third is the delivery and receipt of merchandise. The total overhead here is $100,800. The allocation base is 1260 deliveries. Fourth is shelf stocking of merchandise on store shelves, and then restocking them. The overhead cost is 69,120, and the cost allocation base is 3456 hours of shelf stocking time. Fifth is customer support, is the assistance provided to customers, including checkout and bagging. The overhead cost is 122,880, and the allocation cost base is based on the item sold is 614,400. So the total overhead costs here, when we add up, equals 360,000. We are now required for this family supermarket to allocate the overhead costs to the product lines. So there are 3 product lines on the basis of cost of goods sold for each product line. Calculate the operating profits, and then the operating profit margin as a percentage of revenue for each product line. Second is for the supermarket to allocate costs based on the activities that are incurred for the cost objects, and then calculate the operating profit for each product line, and then operating profit as a percentage of revenue for each product line. Third is to comment on the answers of 1 and 2. So the first one is based on the traditional costing method, and the second one is based on the activity-based costing system, and the third is to comment between results obtained from traditional costing and the activity-based costing. So under the traditional costing, allocating the overhead costs, the total support costs equals 360,000, comprising the cost of bottles returned only for soft drinks 4,800, cost of purchase orders 62,400, cost of deliveries 100,800, and shelving stocks 69,120, and customer support 122,880. That equals total overhead cost of 360,000. The cost of goods sold equals cost of soft drinks is 240,000, cost of fresh produce 600,000, cost of packaging foods is 360,000. When we add up, that adds to cost of goods sold of 1.2 million. Here the allocation basis is a single overhead rate, and this single overhead rate is calculated as the total overhead cost, which is 360,000, is the overhead cost estimated to be incurred, and our basis of allocation is the cost of goods sold, which is 1.2 million. When we divide 360,000 by 1.2 million, that equals 30%, 0.3. So the allocation basis is 30%. So under the traditional costing approach, we're given the revenues, we're given the cost of goods sold. Now we need to allocate the overheads to the 3 product lines. When we allocate the overheads to the 3 product lines, we allocate based on the single overhead allocation rate that we have calculated, that is 30% of cost of goods sold, and we apply that to each product line. When we apply 30% to 240,000, that gives us 72,000 for soft drinks, 600,000 at 30% for fresh food is 180,000. For packaged foods, 108,000, 360,000 at 30% is 108,000. So the total costs for soft drinks, fresh produce, and packaged goods are then computed by adding the direct costs to them and the cost of goods sold and the overhead costs. That gives us the total cost, and our operating cost equals revenue less total cost. For soft drinks, 5,400, fresh produce 60,240, and packaged food it is 15,960. When we calculate the profit margin as operating profit over revenue, soft drinks, that equals 1.7%, and for fresh produce 7.17%, and for packaged foods 3.3%. When we look at the profits to operating profits, it looks here like the fresh produce is the most profitable because it shows after the overheads allocation it is 60,240, and the profit margin is also the highest there, which is 7.17%. And the least profitable here is the soft drinks, which adds only the least operating profit of 15,400, and the profit margin is also the lowest, 1.7%. Now let's look at the activity-based costing and then compute the overhead costs first and then calculate the total cost and the profit, operating profit and profit margin. Before we get to the activity-based costing, first we have to now find out what are the activities that are causing the overheads for the 3 products. There are 4 activities that are causing overheads for these 3 products. The first one is ordering. And the ordering is done at batch level, and the total estimated cost for ordering is $42,400, and the cost that drives the ordering is the number of purchase orders, which is 324. Therefore, cost driver per purchase order is $100. Second is delivery. It is done at batch level. Total estimated cost is $100,800, and the cost that is driving it are the deliveries. There are 1,260 deliveries for this $800,000 and $100,000 and $800, and cost per delivery equals $80 per delivery. Third is shelf stocking. It's output unit level costing. 69,520 is the total estimated cost. What's driving shelf stocking costs are the stocking hours. It's 3456 stocking hours, and cost per stocking hour equals $20. Fourth is customer support. It's output unit level activity, and the total estimated cost is $122,880. And what drives that cost? And based on the output level, it is $614,400 cost is incurred, and therefore cost per item sold equals 20 cents per item sold. So what drives cost here are the number of items that's been sold. Now let's compute the cost and operating profit and the profit margin using activity-based costing system. Revenue for the three products are same as before. Cost of goods sold are same as before because they are direct. Now the cost, the indirect costs or the overheads, we have to now look at in a different way. Cost of bottles returned. That activity singularly belongs to soft drinks. So based on the activity-based costing, we assign that cost to the soft drinks. But then there are other costs like ordering costs. Ordering costs, depending on the number of orders placed for soft drinks, fresh produce, and packaged foods, then the cost allocation differs. For soft drinks, it is 44 orders at $100. Now let's look at costing using activity-based costing approach. The revenue and cost of goods sold, these amounts do not change from the traditional costing methods because they are direct items. Cost of goods sold is a direct cost here. The other costs are indirect costs. Let's look at one by one. Cost of bottles returned. It is singularly incurred by soft drinks. $4,800 is assigned to soft drinks. But when it comes to ordering costs, each cost object drives the cost based on the number of purchase orders placed. For the soft drinks, it is 1,400. Now let's look at activity-based costing approach and costing the product lines. The revenue does not change as in the traditional costing method. Cost of goods sold is direct costs, does not change from the traditional costing methods, but overhead costs can now change. The first one is cost of bottles returned. It belongs to soft drinks only, therefore we assign that cost to soft drinks product line. But the ordering costs are driven by the number of purchase orders made by each product line. So there are 144 purchase orders placed by soft drink and 336 by fresh produce and 144 by packaged foods. Based on that, it's $14,400 for soft drinks, $33,600 for fresh produce, and for packaged foods it is $14,400. Delivering costs are driven by the number of deliveries owned by each product line. For soft drinks, it's 120 deliveries. For fresh produce, it is 876 deliveries. And for packaged foods, it is 264 deliveries. At the rate of $80 for the allocation, it's $9,600 for soft drinks, and for fresh produce, $70,080, and for packaged foods is $21,120. Shelf stocking costs are driven by the stocking hours, and for soft drinks it's 216 hours, and for fresh produce it's 2160 hours, and for packaged foods it's 1,080 hours. At the rate of $20, soft drinks cost is $4,320, and for fresh produce is $43,200, and for packaged foods is $21,600. Customer support is based on items sold, and the items sold is $50,400 for soft drinks, and for fresh produce is $441,600, and for and packaged foods is $122,400, and based on the cost per item sold is 20 cents, and the overhead cost allocated here is for soft drinks $10,080, fresh produce $88,000, 320, and for packaged foods is $22,480,000. Therefore, when we look at the total cost for soft drinks is $283,200. Operating costs, when you deduct revenue from total cost, equals $34,200. Profit margin, profit over revenue is 10.78. Fresh produce, the total cost is $835,200, and the operating profit after deducting this cost from revenue is $5,040, and for package, and the profit margin there is 60 cents or 0.60, and for packaged foods the total cost is $441,600, and when we deduct from revenue, operating profit equals $42,360. Profit margin is 8.75%. When we look at the profitability under the traditional and the activity-based costing, the profit margin and the operating profit, we can see quite a distinction here. When we look at the profit margin, the traditional costing shows as fresh produce as the one that's most profitable, and the soft drinks as the least profitable. From the activity-based costing perspective, the most profitable is soft drinks with 10.78%, and the least profitable is the fresh produce, giving 0.6% profit margin. It is almost the flip side of the traditional costing method. When we compare the operating profits, we can see under the traditional costing method that soft drinks, packaged foods, and fresh produce, the one that gives the most profits is the packaged foods, followed by the soft drinks. When it comes to the activity-based costing, the one that gives the most profit is the soft drinks of $42,360, and the one that gives the next highest is fresh produce of $34,200, and the least profitable is the packaged food. There is $5,040. Again, we can see a contrast here. In under the traditional costing, it shows that the one that gives the most profit is the packaged food product line. Under the activity-based costing method, one that gives the most profit is the soft drinks product line. We can see that the total operating profit under the activity-based costing and the traditional costing is the same. It is now the allocation of profits. Consequently, it is the profit margin has now changed. It has changed because our overhead allocation has changed. So therefore, we have to now make some conclusions. We find that activity-based costing allocation is far more accurate because it can resort to multiple activities and more accurately allocate costs based on these homogeneous activities. Different activities, heterogeneous, but they are homogeneous in terms of similarity of activities, but in terms of the types of activities, they could be different. So there's heterogeneity there as well. So activity-based costing is far more accurate compared to a single rate costing rate method of functional basis of traditional costing method. So if you go by the activity-based costing technique, we can see that the soft drinks provides the highest profit margin and makes the most operating profit. We can also make a recommendation that Because the packaged food under the activity-based costing provides the highest profit margin or the second highest profit margin, which is 8.75, but it gives the lowest operating profit of $5,040. The management must now explore of increasing the market share of the packaging of the packaged foods to increase total profits in a far more meaningful way, because it is providing the second highest profit margin for the enterprise. Activity has hierarchy levels. The 4 levels of hierarchy is the output unit level, batch level, output sustaining level, and organization sustaining level. Output unit level activities, they relate to a single unit output, running each machine with individual activities is an illustration of output unit level activity. Cost of running a machine, consuming resources that cause costs, for example, electricity, that is a unit level activity. Output and activity has causal relationship. When the activity increases, the output increases. It is the output that creates or generates or causes the activity and the cost of the activity. When running increases, the electricity increases. Second is batch level activities. They relate to a group of units of outputs. The cost of setting up a machine is a batch level cost. The cost of setup activity increases with the number of setups needed to produce batches of output. If the time needed to set up a batch of one category of output differs from that required for another, then it is the time, it is setup hours, is a better cost driver than number of setups. Third is output sustaining activities. These activities are undertaken to support categories of outputs, products and services, irrespective of the number of units or batches that are produced. For example, a brand of beer attracts marketing and other costs relating to the brand, regardless of the number of liters or number of batches produced. Organization sustaining activities is the fourth. For example, a chief executive officer of an enterprise carries out activities that the management accountant cannot confidently associate with any individual cause output object. The absence of a cause and effect relationship provides a sound argument for not allocating costs of this nature, but allocating enterprise sustaining costs by definition is arbitrary. It can result with estimates that are likely to be misleading. Therefore, when it comes to activity-based costing, the unit level activities are the most accurate for costing purposes. Then comes the batch level activities. with some degree of errors. Then the sustaining activities with a higher degree of errors, and the enterprise sustaining activities with much higher degree of costing errors. Let's look at how activity-based costing information can support activity-based management. There are three aspects of advocating activity-based costing system. The first is there's a high level of overheads relative to total costs. That means direct costs are in proportion less and the indirect costs are more. Second is the enterprise has diverse processes and outputs. Third is there's high level of competition, therefore accurate pricing becomes important. So when we come up with an activity-based costing system model, there are 5 aspects. The first is the indirect costs. They should be allocated into reasonably homogeneous indirect cost pools. For example, running machines. The machines are used for production, then machines become a resource. Second is there should be a causal connection between the cost of the resource, which is in this case the cost of machines, and the activities undertaken in operating the machine for the production. For example, running the machine. This connection is called the activity driver. So it's the running of the machine that's causing the cost. Third is this resource pool is then allocated to activities. So the way it's been done is we take the cost of the resource pool and then we look at how much activity has been undertaken so that we can come up with how much a given activity cost. That means 10 times it has to be done. When we do it once, how much it costs. Fourth is cost of the activities from this cost of activities pool are then assigned to the outputs. These outputs could be products. The outputs, fifth is outputs rely on these overhead activities for their production and for costing purposes, costing the overheads. So let's apply what we talked about now. So machine running is an overhead cost in this enterprise. So the homogeneous cost pool here are machines being run, and that's generating overhead costs. And the cost of running machines is 600,000. So that's the resource that's been consumed. And that 600,000 cost is for the estimated of 20,000 hours. Second is we need to now causally connect the activity undertaken to the cost of activities. So the cost of the activities in non-monetary terms is the total estimated machine run hours. So that's estimated as 20,000 hours. Third is to come up with a cost driver. That's a rate of the cost. So the way we come up with the rate we take the cost of the resource pool and then we divide by the cost of the activity. So in this instance, cost per machine hour is the rate, 600,000 is the resource, $600,000 is the resource consumed, and that resource is consumed for running for 20,000 hours. So for every hour that the machine is run, costs $30. Now this $30 is an overhead cost. We now look at the fourth. We look at the output. And for the output here is the toy. We ask the question, how much activity is required to produce a toy? How much machine hours are required to produce a toy? It's 1,500 hours. So for that 1,500 hours, the fifth is to assign the overhead cost for the toy, and that costs $30 per hour, and the overhead cost assigned is $45,000. So that's one activity is producing toys. There could be several other activities which are overhead related activities, and we have taken one activity to demonstrate. In activity-based costing, because we have these homogeneous cost pools of activities, these different activities are calculated this way, how much it costs towards the overhead contribution, and then we assign these overheads to the output. In this instance, it's producing toys. Now let's look at traditional costing. And this toy is made in a department, toy making department. And in that functional department, the overhead cost is 2 million. Compare that with the machine cost pool of making toys, $600,000. Because toys are made in this department, the machine hours are same, 20,000 hours. So the predetermined overhead rate under the traditional costing is a single driver here. We take the total overhead cost of the functional department of 2 million and we divide that by the machine hours, 20,000. And the overhead rate is $100 per machine hour. And the machine hours used to making a toy is 1,500. So the overhead cost allocated now is 100 into 1,500 hours, $150,000. Compare that with activity-based costing, where we are specific about the machine that's been used and the cost of running that machine and the overhead that's generated by that machine. And that's $30 per rate, 1,500 hours, same hours, $45,000. So we can see there is a difference between the traditional costing analysis and the activity-based costing analysis. Overhead costs under the traditional costing is 150 grand, whereas under the activity-based costing it's 45 grand. But the activity-based costing is far more accurate and specific, because looking precisely at the relevant activities that are relevant to producing toys. Whereas here, the total overheads here is in addition to producing the toys. This 2 million could include other overheads, administrative overheads, overheads that are not related to producing toys. Now that we know how much overheads are incurred, we can now cost the toy. So the direct material costs do not change under the traditional and the activity-based costing. Direct materials, direct labor, they are same. But the indirect costs, overhead costs allocated under the traditional costing and activity-based costing differ. Therefore, the total costs also differ. So under the traditional costs, the cost per toy equals total cost is 250,000, and let's say 200,000 toys are made, and cost per toy is $25. But under the activity-based costing, it's $145,000. Number of toys made is 200,000. Cost per toy is 72.5 cents. So that makes a difference in the costing of the toys, and hence would drive the selling prices. So when we compare the traditional costing versus activity-based costing, what we can understand is that the overhead base under the traditional costing is functional or department based, whereas under the activity-based costing, it's activity-based. The overhead rate under the traditional is a single rate, whereas under the activity-based costing, it could be multiple. In this illustration, we have taken only one activity, but in making a toy, there could be several different activities conducted, and they are indirectly related to making toys. They are the overheads of producing a toy. So here are some examples of different activities conducted. Purchasing materials. What drives that cost are the pieces of material. Let's say overhead costs for that resource pool, cost pool is 100,000, and estimated number of units made is 50,000. Then the rate is $2 per piece. The second activity related to this production output is machine setup, and the resource pool, cost pool, is 400,000 for that setup, for 200 setups, and per setup is $2,000. Inspection is driven by number of hours. Cost pool is 100,000, and that 100,000 is for 1,000 inspection hours. per inspection hour costs $100. Running a machine is the number of machine hours. The cost pool is $300,000 for running a machine, and it's estimated 10,000 machine hours for that cost pool, $30 per machine hour of running a machine. So we can see that total overhead cost is $900,000, and that's been caused by 4 different activities. And these 4 different activities have 4 different rates because their causality is different. So let's say these activities are undertaken, the same activities are undertaken to produce a computer monitor and a keyboard. The consumption of resources are different. Let's take the first one, materials. $2 per piece. My monitor requires 5,000 pieces, $10,000 cost. Keyboard requires 1,000 pieces, $2,000 cost. Second, machine setups. It's a batch level, $2,000 per setup. Monitor requires 10 setup, $20,000. Keyboard requires 2 setup, $4,000. Inspection third, $100 per inspection. It's a batch level activity. Monitor requires 10 inspections, $1,000. And keyboard requires 20 inspections, $2,000. Running a machine, it's a unit level activity, $30 per machine hour. Monitor requires 400 hours, $12,000. Keyboard requires 100 hours, $4,000. Now we can add up the overhead cost for the monitor. Total overhead cost is $40,000, and the number of items produced estimated as 100. Overhead cost per item is $430. And we can take the keyboard. Total overhead is $12,000, and for that is to produce 100 keyboards. Overhead cost per keyboard is $120. So the direct materials and direct labor, their direct cost in making a monitor, there are 10 kilograms of plastic for direct material at $2 is $20. But for keyboard, 5 kilograms of plastic, $2, $10. Direct labor, 2 hours at $25, $50 for monitor, and 1 hour is required for keyboard at $20. It's a lower level skill, $20. And we calculated the overhead cost. For the monitor is $430, and for the keyboard is $120. So the total cost for the monitor is $500, and keyboard is $150. Here our overheads based on activity base comprise several activities where we calculated the overhead costs separately and then added up to come up with this overhead cost for each production item, monitor and keyboard. Here is a case study called Family Supermarket for us to look at activity-based costing and compare with traditional costing. Here are the financial statistics of the Family Supermarket. there are 3 product lines: soft drinks, fresh produce, and packaged foods. The revenue, cost of goods sold, and the cost of bottles returned specific to soft drinks product line. Additionally, we are also provided with non-monetary information. There are number of purchase orders placed for each product line, number of deliveries received, and hours of shelf stocking time, and then items sold for each product line. So these are the financial statistics. In addition, there are also some statistics about the activities conducted relating to the overhead cost production. And these activities, there are 5 activities. The first one is bottle returns, of returning empty bottles to the store. And the cost pool there is $4,800. And what drives the cost is the direct tracing for soft drink line. Second one is ordering. It's placing orders for purchases. The cost pool there is $62,400. And what drives this cost ordering is number of purchase orders, and for this estimated cost is 624 purchase orders. Third is delivery. It's about delivery and receipt of merchandise, and the cost pool there is $100,800. What drives that cost are the number of deliveries, and for this cost pool it is $1,260. Fourth is shelf stocking of merchandise on store shelves and ongoing restocking. The cost pool is $69,120. What drives that cost are the hours of shelf stocking time, and the hours for this cost pool is 3,450 Customer support is the 5th activity, is the assistance provided to customers, including checkout and bagging. The cost pool for this activity is $122,880. What drives the customer support cost is number of items sold, and for this cost pool it is 614,400 items. When we add up all the overhead costs, the total is $360,000. So these are the information we have, and we are required first to calculate the operating profit, and operating profit as a percentage of revenue for each product line. For the family supermarket, which currently allocates the store support costs or the overhead costs, that is all costs other than cost of goods sold. In this instance, the cost of goods sold are direct costs, to the product lines on the basis of cost of goods sold of each product line. So the basis of allocation of overheads is a single basis, which is cost of goods sold. of each product line. Second is to calculate the operating profit and operating profit as a percentage of revenues for each product line for the family supermarket that allocates the overhead costs, that is all costs other than cost of goods sold, which is a direct cost, to product lines using an activity-based costing systems. So we're taking the activities, the 5 activities, and we are allocating the overhead costs accordingly. Third is to comment on the answers to the requirements of point number 1 and point number 2. So let's look at the first one, which is the traditional costing, allocating overhead costs based on the cost of goods sold. So the total overhead cost is 360,000, comprising cost of bottles returned, cost of purchase orders, cost of deliveries, cost of shelf stocking, and cost of customer support. When you add up all those costs, it equals to 360,000. And the cost of goods sold is 1.2 million, comprising cost of goods sold in soft drinks, cost of goods sold in fresh produce, and cost of goods sold in packaging foods. So the allocation rate for support costs or the overhead costs is, the total overhead cost is 360,000, and under the traditional costing there's a single basis, and the base here is cost of goods sold, and that's 1.2 million. We divide 360,000 by 1.2 million, and the rate is 30%. So the allocation rate based on the cost of goods sold is 30% of that overhead of cost of goods sold. So let's now compute the profits and profit margin for each product line. The revenue information was given to us. Cost of goods sold information is also given to us, and it's a direct cost. The total support or overhead cost is now computed as 30% of cost of goods sold for each product line. And when we multiply 30% on that cost of goods sold of each product line, we get the overhead costs for each product line. The total cost is the cost of goods sold plus overhead costs, and the operating profit is revenue minus the total costs. For soft drinks, it is 317,400 revenue. Total cost is 312,000. Operating profit is 5,400. Profit margin is operating profit over revenue, and that equals 5,400 divided by 317,400, 1.7%. For the fresh produce, operating profit is 840,240 revenue less total cost of 780,000, and that equals to 60,240 operating profit, and the profit margin is 60,240 divided by 840,240 equals 7.17% profit margin. For the packaged goods, revenue is 483,960. Total cost is 468,000. Operating profit is revenue minus total cost equals $15,960. Profit margin is 15,960 divided by 483,960 equals 3.3%. So based on this calculation, under the traditional costing approach, the highest profit margin is obtained from fresh produce, 7.17%. And the operating profit, the highest is in fresh produce, that's $60,000 and 240. To prepare for the activity-based costing calculation, we will now compute the cost driver rates for the common activities for the three product lines. The first one is ordering, done at batch level. Cost pool is $62,400, and the cost driver is number of purchase orders of 624. The cost driver rate is $62,400 divided by $62400 per purchase order. Second is delivery, done at batch level. Cost pool is $100,800, and the cost driver is number of deliveries of 1260, and the cost driver rate is $100,800 divided by 1260, $80 per delivery. Third is shelf stocking. It's an output unit level activity. The cost pool is $69,520, and the cost driver is the stocking hours of 3, 4, 5, 6, and the cost driver rate is $69,520 divided by 3456. Stocking hours equals $20. Fourth is custom support, and it's an output unit level activity. The cost pool is $122,880, and the driver is the item sold, and it's 614,400 items. The cost driver rate is $122,880 divided by 614,400 equals 20 cents per item sold. Now let's compute the overheads. First, our revenue. Those numbers are given, that information. Cost of goods sold, that information is also given. Then cost of bottles returned. It is specific to soft drinks. Therefore, we fully allocate that overhead cost to the soft drinks. Then we have the other overhead costs driven by different activities, and we have calculated the driver rates, the cost driver rates for these different activities, and we're now going to apply those driver rates for each different activities. And therefore, in activity-based costing, the overheads are driven by various activities, and those activities have different overhead rates. So the first one is ordering costs. Soft drinks, 144 orders, and fresh produce, 136 orders. Packaged food, 144 orders. The cost driver rate is $100, and then we compute the ordering cost for soft drinks, fresh produce, and packaged foods. Delivering costs for soft drinks is 120. Deliveries, and for fresh produce it's 876 deliveries, and for packaged foods it's 264 deliveries. For each delivery, the cost driver rate is $80, and then we compute the delivery cost for each product line. The third is shelf stocking costs. For soft drinks, it is 216 hours. For fresh produce, it is 2,160 hours. And for packaged foods, is 1,080 hours. And the cost driver rate per hour is $20. And then we compute the overhead costs of shelf stocking costs for each product line. Fourth is customer support costs. It is based on items sold. For soft drinks, 50,400 items sold, and fresh produce, 441,600 items sold, and for packaged foods, it's 122,400 items sold. For each item sold, the cost driver rate is 20 cents for the customer support, and we compute the customer support cost for each product line. Once we have computed all those overhead costs for the product lines, then we can compute the total cost, that is adding the direct cost, which is cost of goods sold, and then the overhead cost that we have now computed, and that adds up to the total cost. For soft drinks, it's $283,000, and the revenue is $317,400. When we deduct revenue and then minus cost, operating profit equals $34,200. Profit margin of soft drinks is operating profit over revenue equals 10.78. That is 34,200 divided by 317,400. For the fresh produce, we take the direct cost $600,000, and then the overhead cost, and when we add up, the total cost is $835,200. Now operating profit is revenue $840,240 minus $835,200, and that is $5,040. Profit margin equals 0.60%, that is 5,040 divided by revenue 840,240. For the packaged goods, the cost of goods sold is $360,000, and when we add up all the overhead costs, the total cost is $441,600, and the operating profit is revenue minus total cost, that's $42,360. Profit margin is operating profit of 42,360 divided by revenue 483,960, that equals 8.75%. Thirdly, we have to comment about the profitability under the traditional and activity-based costing system approach. So let's look at the profit margins for the traditional cost allocation and activity-based costing allocation. In the fresh produce, in traditional costing method, whereas profit margin is highest for soft drinks under the activity-based costing system. The total profit is highest under the traditional costing method for packaged food, and under the activity-based costing, it's highest for soft drinks. That although the total operating profit are equal under the traditional and activity-based costing, which is 81,600, operating profit for each product line differs under the two costing methods. It's because the overhead cost allocation was different. The traditional costing used a single basis of cost allocation based on the cost of goods sold, whereas activity-based costing identified different activities and then calculated a costing overhead allocation rate based on those activities, different activities, and those overhead rates are different. Conclusions that we can make under the activity-based costing is looking at the results. It shows to us that the soft drinks provided the highest profit margin and makes the most operating profits. Therefore, that product line has to be taken care with. Second, in terms of the profit margin under the activity-based costing, the second highest profit margin is on packaged food, which is 8.75%, but has the lowest profit, which is 5,040. The enterprise should explore of expanding the market share of the packaged foods.